You've heard the news that if you invested $1,000 in Amazon at its initial public offering, you'd be a millionaire by now, right? In fact, the same can be said for investments in both Apple and Microsoft too. It's stories like these that motivate us to begin investing in the stock market, and more specifically, investing in the individual stocks of the world's best companies. But with the stock market near all-time highs, how do you invest $10,000 today? Well, you're in luck. I just loaded up my new brokerage account with SoFi Invest with $10,000 and have come up with a short list of stocks through my research that I believe have a compelling investment thesis. Also, our goal with active investing is to find stocks or even exchange-traded funds that will beat the market. And by market, we mean the S&P 500 index, which is comprised of the 500 largest publicly traded companies in the US. The S&P is undoubtedly the most widely used index in the US to benchmark stock market returns. In one of my last videos, I outlined the case for passive investing or investing using low-cost index funds to capture stock market returns of an index like the S&P 500. Again, this is where I recommend that you invest your first $10 to $10,000 as a new investor to the stock market. It's called getting rich carefully. I would hate for you to lose money on your first investment and then avoid the stock market altogether as an investment vehicle. If you haven't watched that video yet, I'll drop a link for you in the description. But now you want more. You're ready for the excitement of active investing. And just like before, I'm going to put my money where my mouth is and invest real money so we can track our progress. Before we dive into our first stock pick, I have to remind you of a couple of important facts. First, I'm not a licensed financial advisor. As such, this video is for your entertainment only. Second, all investments have risk of loss, so please don't invest money that you can't live without. On that point, I also don't recommend investing in the stock market until you've paid off any and all high-interest credit card debt and banked an emergency fund with at least 3 to 6 months of your living expenses. With those disclaimers out of the way, let's get down to business. For the first stock in Opportunity Stock's investment portfolio, we are going to initiate a position in AutoZone, ticker AZO. Here's what I like about the company and the stock. First, the company is the leading retailer and a leading distributor of automotive replacement parts and accessories in the US. We love best-of-breed companies at Opportunity Stocks. Second, the company has bought back $35.7 billion of its shares since 1998. With a current market capitalization of $44 billion, that's more than 80% of the company. That's truly incredible. The board also just approved an additional stock buyback worth $2 billion, which equates to 5% more of the company at its current market cap. That's a solid vote of confidence by the company's leadership. Stock buybacks are one of the clearest signals a company can send to the stock market that they believe that their shares are undervalued. They also create shareholder value. By reducing total shares outstanding through stock buybacks, investors own an increasingly larger amount of the company. This is one of the reasons that legendary investor Warren Buffett loves Apple so much. Apple has continued to buy back its shares under CEO Tim Cook, and we continue to watch Apple's share price power higher. In other words, stock buybacks boost your ownership percentage in the company. In addition, stock buybacks generally increase per share measures of profitability like earnings per share or EPS, which drive the stock price higher over time. Looking at Wall Street analyst estimates for the AZO stock price, we see a range from $2,340 on the low side to $3,020 on the high side. And the average for the 21 analysts who cover the stock is $2,776, which represents 13% upside for the stock. At the top of the range, at a stock price of $3,020, that's a 23% upside for the stock. In terms of valuation, AutoZone has a price to earnings ratio or PE ratio of about 19.5. If we compare this PE to that of the S&P 500 at more than 22 times earnings, AutoZone is nearly 3 points lower. Given that AutoZone is the industry leader in its business, we would argue that its stock should trade at a premium to the S&P 500 index or the market. In addition, AutoZone stock performance beats that of the S&P 500 index by more than 3 times over the long term. So again, we would argue that AutoZone should trade at a premium, not a discount to the market. As such, we think AutoZone stock is going higher, much higher. Another vote of confidence in the stock comes from a company insider, the chief information officer, who recently purchased over $1 million of AutoZone stock with her own money. There are a number of reasons why insiders sell company stock, but there's only one reason why they buy. They believe the stock is going higher. And arguably, insiders have better information on how the company is performing and its future prospects than we do. So again, we love to see insider buying when we buy a company's stock. Now that we've laid out our investment thesis, let's head over to SoFi Invest and make our first trade for the portfolio. We're going to buy $1,000 worth of AZL, the stock ticker for AutoZone. Let's review our buy order and then place the order. Boom, our trade is all set. Once the web page refreshes, we can see our investment details. The total value of our investment is about $1,000, and we own 0.40396 shares of AZL. Given the stock price is currently at $2,475, we own a fractional share of the company. SoFi Invest is a great brokerage for us since they allow fractional share ownership of companies. Otherwise, if we had to buy a full share of AZL, it would be worth 25% of our $10,000 stock portfolio. And that's too much of a concentrated risk, even for us. Typical money managers max out at 5% for any single stock to minimize downside risk for their clients. But 20 stocks is way too many for us, for our portfolio. We need to be able to do our homework, keep up with company events, listen to earnings calls, and monitor our investment closely. Stretching ourselves too thin would be counterproductive to our goal of beating the S&P 500 index with our $10,000 portfolio. Our target is for around 5 to 10 stocks max for Opportunity Stocks investment portfolio. If you want to follow along on our investment journey, go ahead and smash those like and subscribe buttons. Also, don't forget to grab your free stocks at SoFi Invest. If you sign up with the link in the description, you'll get $25 in free stock. This promo changes all the time, so it may be a little more or less when you sign up, but this is accurate as of the published date of this video. We'll also add links to popular brokerages Robinhood and Webull that are also offering free stocks to help you get started investing. Start today with as little as $10. Well, that's it. That's a wrap for our first video building the Opportunity Stocks investment portfolio. Thanks for watching. Be sure to check out our latest videos and YouTube shorts. Thanks again, and I can't wait to see you on the next video.